Okay, I think we're going to get started. Good afternoon, friends. Hope you're doing well as we enter the final weeks of summer. My name is John Bay. I am the managing partner and co-founder at FSInsight. Today, I'm excited to bring a company that you may not be aware of, but they produce a product that you're certainly familiar with. CompoSecure is the company that produces metal credit cards that many of you use every day. The Platinum Amex card and the Chase Sapphire cards are made out of their product. CompoSecure, with long-standing history in payment innovation, has created a cryptocurrency, cold storage, and security solution called Arculus, which is the main topic today. We are pleased to be joined by John Wilk, CEO of CompoSecure. John has led CompoSecure for over 5 years. He brings more than 25 years of banking, consulting, and private equity operating experience. Prior to joining CompoSecure, he served as the president of PayChoice, a leading SaaS-based payroll company. And prior to PayChoice, John was with JPMorgan Chase, where he joined as head of product and chief marketing officer for the consumer bank. He was responsible for checking, saving, debit, and prepaid products, as well as brand and advertising and sponsorship of consumer banking. John holds an MBA from Kellogg Graduate School of Management at Northwestern University and has a BS from Penn State University. Also, we have Adam Lowe, the Chief Innovation Officer of CompoSecure. Adam is a 7-year veteran of CompoSecure. Adam has a PhD and master's in bio-nanotechnology from Cornell University. From FSI, my colleague Armando Argular, who authored the report, will discuss, explain, highlight the merits of Arculus. But before we get started, my esteemed partner and co-founder and head of research, Tom, will give a brief intro. There will be a Q&A at the end of the presentation. You can ask a question using Q&A button at the bottom of your screen. And as usual, we will be sending out replay information. As always, on behalf of my colleagues, my partner, Tom, and I are grateful for your support and business. Feel free to email inquiry@fsinsight.com with your suggestions and thoughts. I will now turn over the mic to my esteemed partner, Tom. Thank you very much.
Yeah, I just wanted to give some comments to tee up this presentation and fireside chat. I think this is, by the way, a really interesting project company, what they do already, how they're established, and I think that in the role they are likely going to play in really mainstreaming crypto. But maybe the best way to sort of set up the conversation is just talk about risk markets in general. And as many of you guys know, we think we're in a risk-on rally into year end. And I know today's choppy, but progress is not a straight line. So, am I worried because the Dow is down 300 points? No. The VIX is barely able to show any energy. And if the VIX can't muster a real surge, today's just a head fake. And for the most part, we think crypto has emerged from the mini crypto winter that started earlier this year. And that decline in Bitcoin and digital assets was fueled by essentially nation states turning hostile, right? China banning mining, and then now going after many sectors. So it wasn't just crypto, it's education and ride sharing and a lot of technology companies. And the US coming down hard both on the tax side and regulatory side for crypto, and really trying to regulate the on-ramps, and even in stimulus legislation, even trying to write in new definitions of a broker. But despite all of that, Bitcoin has reattained its 200-day moving average. And I think that's a huge deal because that invoked rule number 3, which is crypto essentially is in a bull market once it recovers its 200-day, which is what happened with Bitcoin. And so between now and year end, I think it's going to be the central case for Bitcoin to reach 100,000 or more. And in that context, we can think about, how you want to gain exposure. And, in past crypto cycles, it was really just a question of, do you want to buy the dominant platforms like Bitcoin and Ethereum, or do you want to buy projects? And, maybe in the last couple of years, this included looking at DeFi and other sort of subcategories. But increasingly, I think the answer, if we are in a crypto upcycle, is to look at crypto companies that actually have an equity security. So one, you're having exposure to a company that captures value because the end market and user and the TAM, the total addressable market, is actually the crypto industry. But the companies that are earlier stage and more disruptive actually have a great growth profile, something that's a lot more attractive than buying Square or PayPal, which have tangential exposure. So that's why I think this presentation is very interesting, because Compost Secure and Arculus are really essentially de-SPACing through a larger entity. And in that broad category of companies that have crypto, really pure play crypto exposure, it includes companies like Mogo and Silvergate Bank, Voyager Digital, and Coinbase. So these are the type of stocks that I think are interesting if you believe we're in a crypto winter ending, because they have higher beta to Bitcoin. Well, first of all, then the equity markets in general, but also relative to many projects, because at the end of the day, CompoSecure doesn't really care what the dominant platform is. You don't have to make a bet on, is this Bitcoin or Ethereum? You're just going to make a bet on the ecosystem growing. And with that as sort of the setup of the conversation, I'll turn it over to Armando.
Thank you, Tom. Great overview into CompoSecure and Roman DBDR. As Tom mentioned, it's more of understanding not which is going to be the digital asset that overtakes and rallies, but more of the types of technologies that are able to implement and grow the ecosystem. And I think one of those plays can be CompoSecure here. CompoSecure has a long history of improving security and customer experience. What they're trying to do is leverage their experience and the secure payments hardware solutions and come into the digital asset space. Digital assets have emerged as a new asset class for both institutional and retail investors, where we've seen that it's gone from a traditional fad into going and having large capital inflows, whether it's through investment vehicles or through direct coin purchases. In 2020, we saw over 100 million users in the digital asset space, and that's across all digital assets, whether it's Ethereum, Bitcoin, or also known as the meme coins or other alternative coins. Today, the digital asset space has surpassed a $2 trillion market cap. With this growth, we've also seen the growth of hacking. A lot of companies and institutions being vulnerable to these cyber criminals in the space. In the first Q of 2021, blockchain hacks accounted for about $110 million, which about 20 million were pure wallet thefts. By 2025, on a global scale, there's an expected $10.5 trillion worth of cybersecurity threats coming into the market. So there's a large emphasis and need to have this level of security. So there's more demand for secure and user-friendly digital asset wallets, and CompoSecure bridges this gap and brings a 3-factor authentication secure cold storage wallet into the space. So now let me pass it on to John Wilk, the CEO of CompoSecure, to share a little bit about what the industry is going, how they're doing, and how they're planning to bring the Arculus wallet to market.
Thanks, Armando, Tom, and John. for the time today and appreciate the folks joining on the phone. So I want to start by just giving a quick overview of the CompoSecure, the existing business, before I start to talk about some of the new opportunities that we're tackling in the security and authentication and crypto space. So it's somewhat of a unique situation, particularly in this PAC space, where we have an existing business that will deliver more than 22 million metal cards to the market this year, over 280 million in revenue, and over $100 million in EBITDA, with a growing existing business. We serve over 100 clients across the globe, very long tenure of our largest clients, and a very strong patent portfolio that helps create some competitive moats around our business. At the same time, on the right side of this page, you'll see, our growth aspirations, which is we think we can build $1 billion business in some of the new spaces that we're tackling, on top of growing the existing core. So in our existing business, just a minute on our history, our heritage is in security and chip technology and cryptography. We did work for the Department of Homeland Security on government IDs. That moved into financial services and work we did making the first metal financial cards in the world. That for us evolved over time to grow a significant number of clients, moving into the contactless payments in metal cards, and finally into the crypto cold storage and three-factor authentication. So we have a demonstrated track record of innovation. You'll see across the top with some of the products that we've rolled out, as well as client growth. And by clients, we're looking at some of the marquee names across the globe in traditional financial services, American Express, Chase, Capital One, with co-branded names like Amazon, Marriott, Delta, Whole Foods was a program we launched this year, combined with some of the leading names in fintech, the Revolut, N26, Monzo, Curves, Crypto.coms of the world, as well as some of the new names that you see in 2021. It's important for us that we've got both depth and breadth of relationships. So Amex for us is an 18-year relationship. Chase is a 13-year relationship. And within that, you see a combination of proprietary programs like Sapphire Preferred and Reserve for American Express, Platinum, and Gold, combined with the co-brand programs I mentioned. The reason that's important is with each new program that we add, we get three key drivers. One is new acquisition of customers into each of the portfolios each year. The second is lost and stolen cards. Every year you've got some balance of cards that are lost or stolen or have fraud. And the third is natural reissue, or when the cards expire and you need to send a new one. And with each of those three drivers, when you add additional portfolios, you build up what becomes somewhat recurring revenue over time with the multiple portfolios. So I want to give you an example of how our issuer partners, in this case Revolut, are using our products to drive acquisition in their business. I'm going to share a short video with you.
Designed with an obsessive attention to detail, Revolut Metal is the epitome of our core values: simplicity, elegance, and flawless functionality. At 3 times the weight of a regular card, your metal card is crafted from a single sheet of reinforced steel using a diamond drill bit. Paint particles are layered onto the card using physical vapor deposition, leaving a high polish finish. The copper antenna is fused with a steel body to enable seamless contactless payments. The chip is added, and your card rigorously cleaned and coated in a protective layer. Your details are etched onto the card using a high-precision laser before each card undergoes rigorous quality control, confirming each detail to the precision of a human hair. This is the next step in the evolution of finance. Revolut Metal. radically better.
So for us, that's just a great example of how a fintech is using the metal card to drive core acquisition in their business. Revolut, if you're not familiar, just closed a funding round in the last month, an $800 million funding round, valuing the company at over $33 billion. So I want to give an example here on this page for American Express and how they've used the premium cards in their business. So while the Centurion or the Black Card had been metal for quite a long time, in late 2016, early 2017, Amex looked at refreshing the Platinum product. They had been losing share in the market to Chase, Sapphire Reserve, and Preferred. And they relaunched with 4 key changes of any substance from our point of view. They raised the annual fee from $450 to $550. They added an Uber credit, which was $15 a month, use it or lose it, so very high breakage. They added additional membership reward points on an airline ticket, and they launched a metal card. Those were the 4 changes of substance. What American Express saw was a 52% lift in acquisitions and upgrades into Platinum following the relaunch. And we have built economic models that would suggest that a typical issuer needs to believe about a 1 to 2% lift in acquisition to drive a positive business case. They also saw a 17% lift in spending. And importantly, 290,000 of their best customers proactively called in and asked for the metal Platinum card, even though they were getting all the other benefits of Platinum already. And importantly, 47% of the new customers into Platinum were millennials, which from our perspective is a fairly stunning statistic. But even more important than all of those facts are that following this, Amex made decisions to launch Platinum Business, Platinum International, then Marriott, Amazon Business Prime, and Delta, all in metal cards. In our view, further supporting the case of the positive investment in the product. So I want to transition now from the existing business to some of the new opportunities that we're tackling. And I want to start by foundationally talking about from our heritage in the security and ID space and the expertise in chips and cryptography, we've built a 3-factor authentication solution that has applicability in crypto, as well as other industries like financial services, gaming, gambling, and the entertainment industry. So while it has broad and deep applicability in the crypto space, it's not just a crypto solution. So for those of you not as familiar in the crypto space, most customers, if they're buying crypto today, are storing crypto in what we would refer to and the industry would refer to as a hot wallet. And what that means is that the exchange holds your private keys to your crypto. We've also seen billions of dollars of crypto get hacked. In the last 2 weeks, we saw a hack of over $600 million, although some of that money has been returned. Over the last couple of years, it's been billions of dollars of crypto that's been hacked. What has emerged is what people refer to as cold storage. And what cold storage means is simply that you as the customer control the private keys to your crypto. And if people had been using cold storage in some of those recent hacks, the hackers could not have gotten access to the crypto. With the Arculus solution, you're talking about using all 3 factors of biometric, a PIN, as well as your Arculus card, which is your 3rd factor. And in our case, that 3rd factor is not connected to the online world in any way, making it virtually unhackable. So in the cold storage market, we've seen well, there are about 80 million customers plus trading in crypto today. About 5 million cold storage units have been sold at an average selling price of about $90 per unit. And we've got the ability to produce those products and sell them, at a lower price with better functionality, better security, and a far better user experience. So what we'd like to do is actually do a live demonstration of the Arculus product for you. But before I do that, I'm going to show you a quick video that does a comparison of the Arculus solution to the market leader in the space, which is a company called Ledger. And Ledger recently did a funding round at about $1.5 billion, about 8 to 10 times revenue by our estimates. So I'm going to share this video with you. And while we're doing that, we'll pull up a live demo of the product as well.
Cryptocurrency cold storage wallets are supposed to make our lives easier. So why are they so difficult and time-consuming? With other wallets, setting up your device takes forever. The screen and buttons are too small and too difficult to actually use. It's hard to review and confirm your transactions. It's like going back in time to use a device from the 90s. It's like they put the technology in the wrong device. Then there's Arculus, the keycard and wallet. With the Arculus keycard, pairing is as easy as, and with the Arculus wallet app, sending or receiving crypto is as easy as, with Arculus, you can finally take real control of your cryptocurrency. This is Arculus, smart, simple, air-gapped storage for your cryptocurrency.
So with that, I'm going to turn it over to Adam Lowe, our Chief Innovation Officer, and he's going to do a live demo of Arculus for you. Adam?
So here you can see live our Arculus app as soon as Zoom catches up. There we go. So here you can see live on the mainnet, Arculus connected and our example wallet here with 4 different cryptocurrencies turned on. Again, this is all live on the mainnet, real stores of value. So Arculus at its core is designed to be a safe, simple, secure solution to store your cryptocurrency. So here as an example, if I wanted to drill down into any one of my holdings, I could just tap it. So here as an example is my XRP wallet. I can do a lot of demos. So you see funds flowing in and out of the wallet. If I wanted to receive XRP from any other wallet, I could just tap receive. There's my public address. I could hit share and send that out via text, Slack, Discord, whatever my favorite means of communication are. If I wanted to send XRP, I can hit send. I could hit that QR code button and scan a convenient XRP address, and it'll pull in the address and the tag. Or one thing I like to do as an example is simply tap a previous transaction. Here you can see conveniently we store the address and transaction hash from those previous transactions. Hit repeat transaction. And let's say I wanted to send, I don't know, $3 of XRP to that address. Just hit next. And I want to make a point about security here. So I already used my biometric to open the application. This happens to be an Android phone. It will also work on iOS. Next, I'm going to enter in a 6-digit PIN that helps secure my Arculus app. And finally, I'm going to tap with my Arculus Metal Smart Card. So inside this Arculus card is a secure element. That's a secure chip that secures your private keys and keeps your crypto safe. So here I'm going to enter in the 6 digits. It's going to ask me for my card. I'm going to tap my card to the back of the phone. And just like that, in moments, we sent crypto from cold storage to another address. Just as importantly within the app, if I wanted to exchange crypto or swap crypto, I can just hit exchange. And let's say I wanted to go crypto to crypto. Here in this example, I could go XRP to Ethereum. Or let's say I wanted to purchase crypto. I could go USD to Ethereum or the other currencies that we displayed. So it's kind of one-stop shopping and convenience and secure platform all in one. John?
Thanks, Adam. So I'm going to hit a few more slides talking about our go-to-market, as well as a little bit more comparison to some of the products in the market. And then we're going to open it up for questions, and John Bay is going to help facilitate on our side with some of the questions. So let me go back to a couple slides here. Adam, do you just want to touch on the comparison and some of the differentiation to some of the products in the market? I know we hit some of this in the video, but let's hit this slide and then I'll talk a little bit about go-to-market.
Sure, absolutely. So we believe the card form factor is a real differentiator in and of itself. If any of you have used Ledger or other competing devices, the widget or fob in and of itself can be a challenge to use, and it's another thing to lug around. Not only that, with the little tiny buttons and screens, it really is not the best form factor, in my opinion, for daily use and ease of use. Whereas a card has an entire ecosystem around it. Everybody has a wallet. Everybody carries cards today. And even more importantly than that, there's no battery, there's no cables. It is a complete and secure air-gapped solution, Arculus is, in and of itself. So we think the card fundamentally is a better form factor than a USB-like product. Next, another differentiator is the secure element that sits inside Arculus. So Arculus uses the latest and greatest secure microcontroller that we could get to do this. This is the kind of chip that lives inside an advanced passport, an electronic passport that secures your credentials. Ledger uses an older generation chip, and Trezor does not at all. Additionally, we think we have designed Arculus with the consumer in mind and ease of use. So we put the GUI where it belongs, in our opinion, which is the phone. So all of that ease of use, tap to transact functionality, all of your interactions are with the phone, and then your private keys that sign your crypto transactions are generated on that card and never leave that card and are never in the clear. So we put the security in the secure passive offline device, and we put all of that user interaction on the phone. And we think that design really is the best of all worlds for our customers.
Thank you, John. And we would like to know a little bit more about your competitors. We know that it's a market. We've had Ledger come into the space, as well as there's many others, right? We see the user-friendly activity that you guys have on the Arculus side, the security aspect. Can you walk us through some of the competitors that you have? And let's go through the hypothetical question of what happens. Let's say I lose my Arculus card. What happens? How am I able to retrieve my keys again? Just kind of give our viewers a little bit more of detail of what this process would look like if this happens, and kind of a landscape of the competitors in the space, if you could, please.
Sure.
I'm going to tackle starting with I touch a little bit more on the competitors, and then let's go to the lost card.
Sure. So other competitors in the hardware wallet space, there are some other minor players other than Ledger and Trezor. There's KeepKey, Cool Wallet, and a few other smaller startup type products that are out there of varying difficulty to use, in my opinion. A lot of them are just that they're startups. They're very small. They're trying to dynamically figure out what's going on, as opposed to us, who are certified by all major payment networks and have 20 years of experience. Another point that I want to make of the card, the smart card, relative to other systems, is our ability to integrate B2B. And I think this is where you're going, Armando, is that we can have this ecosystem network effect, right? So I can take Arculus and on the roadmap, put it in a traditional payment card as well. So you could imagine you have an integrated payment card. So when you're at the store, you can be doing payments. And when you want to interact with your crypto wallet, tap your Arculus card to the back of your phone and interact on the crypto system. We're really excited to partner with B2B brands as well, just as we partner with payment cards today to bring Arculus security technology to their brands. So I wanted to make that a point as well. On the security side, if I were to lose my Arculus card, that's fine. It stays completely secure. So it's secured by PIN as an example. So if someone were to find your Arculus card on the street, they would not be able to access it because they don't know your 6-digit PIN. Furthermore, to recover your funds, you can simply get another Arculus card. And during the wallet generation process, you're provided a 12-word recovery phrase in plain English. So you get your new Arculus card, you say, I want to recover my card. You enter in those 12 words and you're back in business.
Great, thank you very much for the update. I think that makes a little bit of the competitive edge of what we have with Arculus compared to the other traditional cold storage wallets, which is simple and easy to retrieve. Thank you very much, Adam.
So I want to go ahead. I want to touch on go-to-market a little bit more. So as Adam talked about, we've got on the right side of this page, the B2B model, where we can go through traditional financial institutions, fintech companies, as well as the crypto exchanges. And as Adam said, we're happy to white label this solution. It could be a Coinbase branded, Robinhood branded, Gemini branded card that is that's driving the day for these fintechs or financial institutions to offer a crypto cold storage product. We will also sell direct to consumer in places where Ledger and others are selling. And we've got the ability with our scale and profitability, we will take share in this market. So in our core business, if you do the math that in our investor presentation, you can see that we've got an average selling price across all of our card types of about $13. And we have EBITDA margins north of 40%. For us in the cold storage space, it's somewhat similar manufacturing processes and costs of some of our mid-range cards, not necessarily against our ASP, but if you look at the cold storage market, the ASPs in that market are roughly $90. That's our estimate against the volume that's been sold. So if we were selling at $90, our margins would be extraordinary. We have the ability to sell at lower than that, and we will optimize our pricing to take share in the market and do so profitably as we always have. So, we're a unique animal in that we've got an existing business that is growing, highly profitable, that is enabling us to fund the growth. And there's a lot of synergy in the growth for our ability to produce Arculus as well as products in our core. And that's what we think is kind of very unique about this SPAC opportunity. The other part of this for us is that people generally refer to SPACs and SPAC transactions as a blank check company. And for us, just that's not the case. The Roman DBDR team that we are intending to merge with is a highly value-added team that we are partnering with. They have 30 years of experience in growing and scaling technology-based businesses and experience in the crypto and blockchain space over the last 5 years. So for us, they are a terrific partner to line up with as we think about this SPAC transaction. So with that, guys, I'm happy to open it up to questions.
Okay, thanks for the presentation, John and Adam. That was extremely informative. So we have several questions here. Just gonna. Can Arculus keep track of P&L, i.e. for tax reporting purposes?
So you do have a history tab, so you can see all of the history of all of the ins and outs of the wallet that you've made, and any swaps where you'd be going from one to another, which would be relevant for tax purposes.
Are there transaction fees on crypto the same using your card versus, say, buying it through one's wallet at Coinbase?
So everybody's fee structure is a little different. I don't want to comment on any given fee structure a single day. There is, I would say, we're in line with the industry that if you purchase with fiat currency, with dollars to crypto, the fees that the wallet charges are in line with the industry.
Okay. Can I stake DeFi tokens on your card?
So DeFi implementation and token staking is on the roadmap. It's not available at launch. We wanted to really focus on the security and ease of use for launch, and then we're certainly have a strong eye on DeFi integration for the future.
Will the company hold cryptocurrencies on its balance sheet?
It's a John question.
Yeah, sure. So, we're not looking to take a large position in crypto as part of our balance sheet efforts. We're making our bets on the industry with the investments that we're making in building and growing this product. We will have some crypto transactions flowing through from some of the recurring revenue that we're getting off of some of the transaction fees that would be converted to dollars.
Great. Here's an interesting question. Can you elaborate on how you believe network effects coincides with your business model?
Yeah, I think we can think about that a couple different ways. One is there are some customers that independently want to hold their cold storage wallet. So think about the network effect of, you could be buying crypto from any one of 3 or 5 different exchanges. You could centralize all of that in your Arculus wallet if you wanted to. And so, you've got that network effect of sort of the more different wallets somebody has out there, that there's, a desire to bring them into one common place. Arculus could be that place. I think the other side of it is the white label side of, being able to keep things within an ecosystem, and, think about a large exchange that, would prefer to keep the assets inside of something that is branded by, exchange X, Y, or Z. So I think about that, with those things in mind in terms of how people will use that. But generally speaking, cold storage is growing rapidly, and if exchanges aren't thinking about it, it's going to happen to them.
Thanks, Sean. This, I think, is a question for John. Can you speak as to what kind of revenue mix you're anticipating between your individual versus financial institution business? I guess B2C versus B2B.
So we haven't broken out our projections at that level. We have given some decent detail in the investor deck. So, we've cut the revenue across the 2 businesses. So we've cut the existing business from the new stuff. And then within the new stuff, we have given breakouts of hardware subscription revenue and other breakouts, but we haven't given a breakout at that level of B2B versus B2C.
Thanks, Sean. This is, I think, for you, Adam. Is it possible for a malicious attack to occur after app authentication enduring NFC tap to sniff private keys?
In short, no. In a longer answer, the NFC communication is designed, and the card is designed such that you have to tap the card to the phone. So you would have to literally put a probe like against the card in the phone to even see any traffic. But on top of that, the channel between the card and the phone is encrypted. So even in a lab, if you put a packet sniffer between the card and the phone, all you're going to get are encrypted packets. So there's no way to do a quote man in the middle of the pack as the system is designed. And again, the secure element that holds your keys is what's called a trusted execution environment. So it is a highly secure piece of hardware and a highly secure piece of software that if it senses any malicious acts, locks itself. Very similar to the way your banking card interacts.
Thanks, Adam. At the launch, will CompoSecure offer Arculus direct to consumers?
Yes, we will. We will start taking orders in September. And yes, we will be launching direct to consumer with some significant marketing efforts behind that as well.
Thanks, Sean. Can you please comment on relative value of your platform given the recent prevalence of cybersecurity risks at the enterprise level, particularly for those acting as trusted third party in a normal financial transaction?
Try that for me one more time, John. I want to make sure I understand the question, and
Yeah.
you're reading it there, but
please comment on the relative value of your platform given the recent prevalence of cybersecurity risks at the enterprise level, particularly for those acting as trusted third parties in normal financial transaction.
Yeah, so I'm going to try to answer this. I'm not sure I'm going to get it exactly right, but if you look at our existing business, you've got a business growing, we're projecting 15% a year, throwing off 40% EBITDA margins. And, if you look at the multiple that you're paying on this business, it's, if you looked at this year's EBITDA, it'd be roughly 10 times this year's EBITDA. And, you're getting a call option on sort of entering into the crypto and cyber security and authentication space, for which companies today are trading at extremely high multiples. The Ledger example, 8 to 10 times revenue from our estimates. A lot of companies trading at 15 to 20 times revenue in this space with unproven models. So as we think about things, the valuation side, our ability to grow both sides of this business, the existing and the new, are important to us. The market to us is certainly paying a premium for companies that have the right idea and are able to execute on the cyber and security and authentication space.
Thanks, Sean. Can you guys talk about the plan for adding new coins onto the card? We've had this question before.
Sure.
Adam?
So Arculus has a robust roadmap that we're really excited about. So when we think about what new coins, currency, tokens to add to the platform, we look at two things. First, we look at just market cap, volume, excitement in the space. So while we're not currently commenting on exactly what and when, you can imagine some of the coins that the market is most excited about are definitely in the roadmap for us to add. And then additionally to that, we think there's a few smaller cap coins that bring really interesting intellectual value and equity value to the space. So we're going to be looking to add those as well. So it's a mix of high volume trading, really shining stars at the moment, as well as ones that we think bring significant value to the community.
John, I want to come back to an earlier question as well on the sort of B2C versus B2B.
Mhm.
That if you look at our projections, to hit our projections for kind of this year and even next year, if we had one successful B2B partnership of any scale or size, we would hit our projections for this year and next. So we had projected 100,000 units this year and roughly 300,000 next year. And for us, if you look at the large crypto exchanges, if even if you took fractions of some of their customers and volume, it's not a lot to be able to hit what we need to hit. And we are exceptionally good at selling in the B2B environment. That said, we could also get there quite easily on the B2C side. So I just wanted to give a little more color on how we think about the future.
Thank you. Okay. Is there any physical limit on the card for supporting number of crypto assets?
I mean, there is technically a limited number of memory, just to be specific, not realistically. It's a very small amount of information you have to store for the key set, and there's plenty of memory on the chip. So not really, no.
Adam, is my transaction data secure? Can you or someone aggregate data similar to what the banks do?
So it's secure in that your private keys are secure and no one knows who you are in the sense of the outside world or your total holdings, right? No one can associate you with a specific address unless you were to so choose or disclose. But an important point to make here is all of these currencies we're talking about are public blockchains, right? So if someone were to randomly go to blockchain.info and scroll and enter in an address, all of the amounts are associated with those addresses publicly, but no one can link them to a specific person.
Okay. Will this wallet be NFT compatible?
So yes, that is on the roadmap. The Ethereum wallet on which most NFTs are based is already in the system. So it is definitely on the roadmap to integrate NFTs shortly into the system.
Do you have a planned hardware upgrade cycle?
Yes, so we've designed Arculus the best we can to make it last as long as we can for consumers. Crypto is such a dynamic space that I'm not going to promise that the hardware is going to last forever. And we would look at doing something, especially for our early adopters, to make sure we keep our customers happy and secure with the latest technology.
I think this question is for John. Can you speak to about the current pipeline for partnership distribution?
Yeah, so we're not commenting on specific players, but we can comment on the fact that within the crypto space, we're attacking all three legs of the stool that I described, which is crypto exchanges, traditional financial institutions that are looking to give their customers access to cryptocurrency, as well as fintechs. All three are active conversations that we're having, as well as some of the critical network partners that you need to help make some of this happen. But I would add to that, John, that in our presentation, we lay out sort of very sequentially. We're going to attack crypto, and then sort of by the end of next year, we're going to attack some of the other verticals, and we're not waiting. So we're actively having conversations in the gambling space or the gaming space. So we're not waiting to do it in a sequential manner. We believe we've got the solution that can make an impact in a number of those verticals.
Got it. Thanks, John. John, this question I think is for you again. From company perspective, what's a better business? Is it the credit cards or is it going to be Arculus?
I have two kids. I love both of them. equally. We have two businesses here. I love them both. They are just terrific businesses. We have some of the best clients in the world, John, that we've been serving for 20 years and will continue to do so in an exceptional way. We are very excited about the new opportunities in front of us, and we are going to invest heavily in going after them. So I love both kids.
Can you elaborate in terms of margins on both kids? Is one better than the other?
Yeah, so I'll go back to what I said earlier, which is, we've got an ASP in our core business of $13 with a 40+% EBITDA margin. The ASPs in the crypto cold storage place are higher. And when we line up our COGS, yes, we believe let's say on a run rate basis, the profitability, the margins would be a good bit higher in some of the new opportunities that we're tackling. We're also going to be investing over the next 18 months, marketing budget and other things to help grow this base and invest. So, you'll see in our projections, the margin profile looks actually slightly lower on the new stuff over this sort of first 3-4 years as we build and spend to get into it. But on a run rate and on a normalized basis, on a unit economic basis, the margins would be higher on the crypto and digital asset side.
Thank you. This is definitely a question for you, John. John, is there a reason you're taking this company public via SPAC as opposed to traditional IPO?
Yeah, so one of the things about the sort of traditional IPO versus the SPAC route, at least today as the rules are written, with the SPAC process, we are able to tell the story, John, of not just where we've been, but where we're going. So, and in our case, that story is so unique, right? Where we've got this existing business that we've grown over the last 20 years, and in particular, grown really nicely over the last 5 years. I joined this company, 5 years ago. It was, roughly 90 million in revenue. We've grown it to 270 million in revenue over that time. And, when we look at the forward story here, we think it is also really exciting. So the SPAC process let us tell both sides of the story. The second part of it goes back to the partner here, the Roman DBDR team, and our ability to select a partner to do this with that has as much value add to the process as Don Basile and Dixon Dahl Jr. bring to the table from the Roman DBDR side. We think that is one of the other critical reasons for us that the SPAC path is great. And John, I'll add one more, which is, when we look at the SPAC market today, we think we're really unique. You don't see the combination of profitability, growth, and upside that we bring to the table in one place in the SPAC market. That's our point of view.
Thanks, John. I think we have time for a couple more questions. Adam, is there any plan for integrating with the FIDO 2.0 on the Arculus platform?
Yes, absolutely. I didn't want to confuse the narrative early, but Arculus will also integrate the FIDO 2 applet. And so for users who aren't familiar, because this is getting in the weeds, what FIDO is, it stands for Fast ID Online. So this is additional security that can sit on the card and allow platforms to securely authenticate login, even in a passwordless way. Importantly, this software is natively supported in things like Google Chrome, Firefox, etc. So you could imagine a scenario where you have favorite website X or favorite gaming platform X, Steam, etc., where you could take your Arculus card or your payment card with this technology, tap the card to the back of the phone, and log into your favorite website, platform, etc. So it really gives us the ability to integrate into exchanges, whether, as an example, whether they be custodial exchanges. So imagine a Coinbase type scenario where they control your keys. You could take a branded card, their branded card, tap it to your phone. You get secure login as part of a multi-factor authentication, or a non-custodial solution where you control your keys and you can use the full signing capabilities of Arculus that we already talked about. So by using the FIDO standard, it really allows us to work with our B2B tech partners and meet them exactly where they are in their technology ecosystem.
There's a great question, John, and an important part of the forward story for us is the intersection of payment cards, Arculus, and FIDO, sort of the card as a token.
Okay, actually, let's do a couple more questions because I have a question. John, can you explain how the landscape might differ if Coinbase or Binance were to take over one of your competitors like Ledger, Trezor, or Kiki?
Yeah, so, as we would think about the world, John, there is nobody who has done a better job at playing with large entrenched players in the same market than we have. So, we have been able to play with the JP Morgan, Amex, Cap Ones of the world, at the same time. We're certainly looking to do the same with the crypto exchanges. But if one of them chooses to line up with one of our competitors, we'd be happy to line up with all of the others. John, we just firmly believe that our product is a far better user experience. It's more secure. And on the unit economic side and a pricing side, we will price such that we can take share in this market.
John, you bring up a good point. I mean, how much is the competitive advantage of Arculus more your marketing experience as opposed to the technological advantage?
We actually think it's absolutely a combination of all of it. So we think we've got better tech. We have filed for patents around the unique and novel transaction flow that we've developed to execute these transactions. We think we've been smart about which technology we put in which device, because that really has been one of the problems. And John, today, if you're operating with a crypto exchange, one of the things that they're doing is they're turning on multi-factor authentication, where they'll have you go out to a third-party app, get a code, come back in, remember the code, enter it. It is easier to transact out of cold storage with Arculus, in my opinion, than it is to use multi-factor authentication through the exchanges today. We've made it that easy. We've brought to cold storage what Amazon brought to one-click checkout. We've made it that easy. And so that's how we think about the difference and differentiation. And yes, we can market it, we can partner with the best of them, and we will be aggressive about taking share in this market.
That's awesome, John. That is great. So let me ask the final question, and it's a question I ask just about all our webinar hosts, which is, John and Adam, if there is anything, maybe there isn't, but if there is, what keeps you guys up at night? What's some of the worries you might have in the back of your mind, if at all?
Sure. So when I think about what keeps me up at night, it is some of the things that we don't control, right? So for all the reasons we've talked about in terms of why we think we're, the best in the world at what we do, things like the regulatory environment are things that we can't control. At the same time, our play in this market is security and authentication. And whether a specific currency is at 40,000 or 60,000 is less relevant to us. It's more relevant that there is a need on the security side to lock it down. And so for us, whether that's crypto, whether financial services, gaming, gambling, all of these examples have security issues. That's what we're attacking. And that's why, I still sleep well thinking about the regulatory changes that may come to the crypto market that, we can't possibly predict, but we talk about some of those as risk factors. And then just making sure that, we've got the best in class security and underlying technology. So those are the things, John, that certainly we think about. But we've got a 20-year track record of executing and growing our business. We're not a startup. And, to us, that is what makes this opportunity unique.
Well, thank you, John and Adam. That was absolutely fantastic. Congratulations on a phenomenal business. I know you guys, all the financings have already been done. And so there are a lot of big name believers out there, and it's just a tremendous story. And certainly we are extremely bullish on your company. So thanks again for doing this for us, and we will continue. And for our audience, I want to thank you for joining us today. If you have any further questions for our guests today, please forward them to inquiry@fsinsight.com. And I hope you have good rest of the summer, and I hope to see you in our next webinar. Thank you very much.